Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are into the second day of the trading session and trends in the GIFT Nifty are pointing out to a positive start today. Even if you look at the pre-opened rates are also looking like, the market stability is here to stay at this point of time. Sensex up about 200 points, Nifty also above that 24,850 mark. But yes, it is the Sensex weekly expiry day, so some price swings could be anticipated in today's trading session. Even yesterday, for that matter, we saw markets taking a U-turn after sustaining gains throughout the day. In the last 30 minutes, we did see that the Nifty couldn't hold that 24,800 mark. So we'll watch out if the next support that comes in at 24,750 stays intact in today's trading session. On the other hand, resistance still stays above at 24,850 for the Nifty as of today. But yes, global cues that have remained so far supportive. If you look at the equity market-wise, US markets have been on a strong foot ahead of its key inflation reports, which is due later this week. So both the PPI and CPI reports is something that we'll be watching out for, because that will shape further direction for the US Fed's policy, which is due next week as well. But yes, US markets, Nasdaq clinched another record high, while Dow Jones surged over 100 points as well, and S&P 500 also closed the day with about 0.2% gains. Similar was the case for Asia-Pacific markets, wherein the Japanese Nikkei 225 has extended the rally to the second consecutive session on Prime Minister Ishiba's resignation. So if you look at Nikkei 225, that crossed about 44,000 mark for the first time ever as well. So equity-wise, we have had good cues from overseas, given the fact that now market is fully pricing in that 25 basis point rate cut that the Fed could deliver as soon as next week itself. But yes, on the back of that, gold has been glittering away. Another record high for the yellow metal as well. Silver also touched at 14-year high as well. But yes, now to understand how you should place yourself in an environment like this and what stocks you should watch out for, we'll get in our experts as usual, and we'll also address your stock related queries as well. So keep posting them on our live feed. But before we get ahead let's take a quick check of the top headlines. Sir. Stocks on Wall Street end the session higher. Nasdaq surges 100 points to close record high ahead of inflation data, which is due later this week. Markets in Asia Pacific have opened largely higher as well. Nikkei 225 has crossed 44,000 to touch fresh all-time highs, extending its rally after Prime Minister Ishiba's resignation. The GIFT Nifty indicates a positive start for our own markets. Crude oil prices have gained after OPEC and allies decided to increase production less than what the market had anticipated. Meanwhile, gold prices have rallied to a record high above $3,600 an ounce as Fed rate cuts solidify. Indian IT major Infosys will consider proposal for share buyback on September 11. This marks the company's first since 2022 when it had approved a buyback of 9,300 crore rupees. The ADR or US listed share gained over 2% overnight. And Foreign Minister S. Jay Thakkar virtually attends BRICS summit hosted by Brazil. Chinese President Xi Jinping and Russian President Vladimir Putin also attend the summit. All right, if you look at the yesterday's trading session, Nifty did extend its upward trend for the fourth straight day, but the late selling weighed on the Nifty and that ended the day flat to positive bias, but under that 24,800 mark. If you look at the broader end of the markets, they also exhibited quite mixed trends. Mid-caps outperformed, however, small caps ended the day flat in the trade. And auto heavyweights, that led the charge yesterday on the back of the GST rationalization measure as well. And of course, the price cuts that we have seen across the automakers ahead of the festive season. And that is what buoyed the interest in the auto index as well. Metal index also cheered on the back of rate cut hopes by the Fed, and of course some good data that also came in from China as well, and that is what kept Nifty metal stocks on high hopes as well. But yes, what did not do well, that was your IT index that felt the heat on the back of a weak US jobs report, and of course you have the pharma index also that saw some bit of a selling pressure in yesterday's trading session. But yes, since it's the Sensex weekly expiry day, I was mentioning that the volatility and of course the price swings could be felt in today's market as well, and we'll be watching out how today's developments take shape. But yes, on the fund flows data, FIs that stood as net sellers investors in yesterday's trading market. They sold stocks which is worth about 2,500 crore rupees in the cash markets. However, offsetting the impact, DIIs bought stocks which was worth about 3,000 crore rupees in the cash markets as well. Coming to the Nifty put call ratio, that rose to about 0.95 from 0.86 levels, and the stock that continues to be a part of the F&O ban, that is your RBL Bank, and no stock has been added nor has been removed from the F&O ban list. Yes, but yes, let's take a look at how the pre-open rates stack up right now. Sensex up about 300 points and Nifty also above that 24,850 mark. Whether or not we actually open in the positive and whether those gains sustain throughout the day, that is something that we'll be understanding also. But on that note, let's quickly get on board with the technical expert of the show. Joining me is Jay Thakkar, Head Derivatives and Quant Research of ICICI Securities. Jay, good morning. Yesterday we did see some late selling and Nifty couldn't manage to hold above that 24,800. What can we expect the next few sessions to hold for the markets?
Good morning to you, Lovisha. Thanks for having me on your show. I would say that on the upside, Nifty has been facing clear resistance around the levels of 24,900 and 25,000 is the bigger hurdle, I would say, wherein for this weekly expiry, that is for today, you have the highest fall base. In fact, since past couple of weeks now, 25,000 has been acting as a very clear resistance, Lovisha, and then till those levels are not taken off, to assume that the trend has reversed from down to up or from sideways to up is not clear. So only about those levels of 25,000 you'll get a further confirmation of a trend reversal. Since past four trading sessions, we have been seeing Nifty closing in the positive territory, and it's been mildly positive. Some day 30 points, some day 16, some day 9, something like that. So due to which, of course, on the lower side, 24,600 to 500 now seems to have formed a good support level on the Nifty. But on the upside, 24,900 to 25,000 is acting as a resistance. So it's quite now struggling or trading into the range. Short-term range could be of 24,600 to 900, which is of 300 points, roughly around 1%. And the broader range could be is of 2%, which is 24,500 to 25,000 levels, Lovisha. So I think that till we are not seeing a meaningful breakout from this 500 points range, to get a directional move in Nifty will be difficult. Now, what's happened also, I would like to add, is that if you dissect the Nifty, Lovisha, then 50 to 60% of the Nifty is not moving. Now, let's see what happens today in the Nifty. IT post the announcement of the Infosys for the buyback probably could help the stock as well as the Nifty IT index to inch up, and which could transfer or which could help the Nifty to bounce back a bit. But otherwise, overall, if you see the banking pack, which has around 40%, has not been performing. IT so far has not performed. It is about 10%, almost oil and gas, including Reliance. So that 60% of the market did not perform so far. And you can add some part of reality as well. I mean, a couple of percentages to that. So 60 to 65% market did not perform. Maybe adding Airtel, so 70%, 30% of the market which performed so far and which has had Nifty to slowly, gradually take a pause or bounce back is Nifty Auto, bit of Nifty Pharma, FMCG, consumer durables. So these are the few sectors which has performed, and of which auto has been the outperformer and has significantly outperformed all the other sectors, at least in the past 1 month. And definitely, the GST reforms or GST 2.0, which has been announced, has really helped the sector to move higher. So till you don't get the rest of the 60, 65, or maybe 70%, that kind of a market to get that trigger or get that reversal, Lovisha, it would be difficult for Nifty to surpass 25,000. If that happens, then definitely there can be good amount of short covering because there are good shorts. FI net long is below now 8%, which is to the lower end of the extremes. The only concern is the volatility, which is trading below 10. The volatility readings, or IVP, that is called IV percentile, and IVR, that is IV rank, that is also trading at the lower extremes. Now, the volatility with the FI shorts or FI data indicates that market has more legs down, and the oversold readings of the same indicates that there could be some bounce back. So market is now indecisive where it's likely to head. So breakout beyond this 500 points range broadly, as I said, Lovisha, could trigger further up move. Up move would be because of short covering, and fall could be because of the underperformance which continues.
Okay. Jay, you mentioned that that 70% of the markets is still holding down at this point of time. But do you believe that the Fed rate cuts, which could be possible next week itself, could give some trigger to the IT or even for the financial SPAC for it to make some reversal in the markets in the near-term horizon?
I think, see, Lovisha, 25 bips is factored in. So I don't think that that is going to help Nifty to bounce back because that is factored in. I mean, global equities, US has been inching or climbing higher because of that. In fact, gold, if you see, has provided that breakout beyond the 34, 35 levels on a closing basis. And now it's about 3,600 levels as well. So it climbed almost 200 points after the breakout. So that has factored into it. So I think most of the Fed news are factored in. Some other trigger is really required, Loisha, for market to in fact move up directionally beyond 25,000.
Okay. But yes, you did touch a base upon consumption names that they have been the clear outliers at this point of time. If you look at it, auto index, once again yesterday they did quite well on the back of the GST rationalization measures and of course the price cuts that majority of the automakers have taken. What do you believe, does the auto stocks have more steam ahead?
Auto in the long term, medium to long term, definitely is reversed. We shall no doubt about it. In the short term, there are a few stocks which have run up quite a lot, so there could be some, not value, great risk reward opportunity for going long. But I think any dips in auto should be a buying opportunity. It is into a structural uptrend now. So all the negatives are aside, and I think it's into a real structural uptrend, and this leg has more, upside pending, at least from medium to long term perspective.
Okay, all right. Let's now take base and talk about the first rates that is coming on our screen. Well, we have opened in the green. If you look at the Nifty, it has opened above that 24,850 mark as well. Sensex is also doing well with about 300 points gain that is coming in for the Sensex too. All in all, we are headed for a positive start for the markets, given that the global cues have remained largely positive. And let's see whether or not these gains get sustained throughout the day as well. But yes, let's address some of the sectoral moves in the early trade and in the first minutes of the trade. If you look at the Nifty Auto Index, seeing some profit booking at this point of time, like we were discussing earlier. Medium to long term looks quite positive, as Jay says, but right now we can see some profit booking on the counter, flat to negative start for the Nifty Auto Index. On the other hand, if you look at the Nifty IT with about 2% gains coming in, definitely that comes in from Infosys, given that the company has planned to mull share buyback in just 2 days. So on the back of that, we can see IT index has been moving quite higher. 2% gains coming in for the Nifty IT as well. If you look at the Nifty Pharma as well, Nifty Pharma after yesterday's heat, yesterday majority of the Nifty Pharma stocks took a little bit of a beating, but today also it's opened higher with about 0.3% gains. On the other hand, if you look at the financial names, Nifty PSU banks, private banks, they have also taken a firm start, both of them seeing slim gains to about nearly 0.1%. But yes, so all in all, we are headed for a positive start. If you look at the India VIX, still above sub about 11 odd levels, showing that there is no immediate near-term panic for the markets at this point of time. Let's take a look at the broader end of the market. Small caps with about 0.2% gain, mid caps at this point of time still faring well at this point with about 0.2% gain as well. So all in all, it's a positive setup for the markets. Let's take a look at some of the top gainers and losers on the Nifty 50 then. Tech Mahindra doing well, 1.3% gains coming in on the back of the Infosys news. TCS also with about 0.9% gains. Infosys doing well, 3% gains coming in there too for the counter. Wipro, Tech Mahindra, all of the IT stocks, dominating the list for the Nifty gainers list. Dr. Reddy's, HCL Tech, SBI Life, TCS, Hindalco, all of those names we can see once again. Metal stocks also holding the gains today as well, once again on the back of the rate cut hopes that is anticipated as soon as next week as well. On the other hand, if you look at the top losers on the Nifty 50, Titan, ICICI Bank, Shriram Finance, they seem to be not doing well. Eternal seeing a bit of a profit booking, 1.5% gain, downtick coming in. Yesterday we did see some moves on the back of Nomura's rating, and today it's seeing a little bit of a profit booking on the back of that. Other than that, we can see auto stocks also taking a bit of a setback. M&M with about 0.2% declines coming in for that particular counter. Bajaj Auto also seeing a cut of about 0.5% as well. JSW Steel and Shriram Finance also some of the other losers on the Nifty 50. But yes, let's talk about the one stock which is stealing the spotlight today. That is your Infosys. The company is soaring at the trade. The stock is soaring with about 3% gains. The company will be mulling its share buyback on September 11, and this will mark the first buyback since 2022 when the board had okayed your 9,300 crore rupees share buyback. So far this year, however, the stock has been an underperformer, and the small recovery that it saw from in August as well, that too got fizzled out. Today, it's seeing a good breakout. But Jay, what can we watch the next level for Infosys? What are you watching out for?
Well, we really need to see, as I said, Lovisha, that Nifty IT could bounce back a bit today because of the announcement by Infosys yesterday, and we need to see whether it is open market or whether it is through the tender route, right? And how much upside, what price are they, really offering? Whether it could be really that 18 to 20% kind of, uh, offer, buyback offer. And if that is the case, then definitely it will help the stock to inch higher even more from these levels. See, it's trading around the levels of 1475 right now after being approximately 3% up today. So, Lovisha, the next level on the upside comes to 1550. I mean, at least till those levels is what you can see this bounce coming in. And on the downside, now 1425 is a very good support. I think that till 1425 levels aren't broken, you can see 1550 at least, which is another 75 points. That is 5% from here on.
Okay, all right. Let's take one more Nifty 50 gainer today. That is your Dr. Reddy's Lab. The stock has been doing well, about a percent gains, and in the past 1 month also the stock has gained about nearly 4% itself. Jay, what can we expect from Dr. Reddy's Lab? Because past 1 month the stock has still tried to maintain its momentum.
Well, on this, I would like to have or provide you a disclaimer that I have recommended this to our clients. I have recommended a strategy on Dr. Reddy's, first of all, a long triangle strategy wherein we have recommended to buy 1280 call option and 1240 put option as well. So both call and put has been recommended. Reason being is that I'm expecting a breakout from this range of 40 points. It's been consolidating since couple of trading sessions now, Lovisha. I mean, at least from August. So it's quite more than 2 weeks that the stock has been consolidating within this range, and I think that the most of the consolidation seems to have got over based on the quantitative reading, and I think a breakout is likely from this range. Today's trading positive, quite likely that if it provides a breakout on the upside, and if it does beyond 1280 levels, then Lucia can inch towards 1360 as well. So one can initiate either a strategy by a long triangle or beyond 1280, wherein you will get a confirmation of the breakout. One can go long targeting 1360.
Okay, all right. Let's take another stock in focus, that is your Brigade Enterprises. Nearly a percent gains coming in for the counter, given that the company has signed pact for a luxury residential project in Bangalore as well. However, from June peaks, the stock is down about 28%. What can we expect the next moves to be, Jay? Because today the stock is seeing good moves, but can we expect a certain bit of an underperformance in the near term?
Brigade has been, falling. I mean, first of all, I would like to say that this is a non-FNO stock which I mostly closely track FNO, but then this being a non-FNO stock, we can look at it from the quantitative perspective. And what I see is that the stock is continually losing the momentum and has been trending lower only. So it's just oversold, definitely, but there is no sign of reversal. Those who are holding it, I think the stop loss or the support is quite low, which is at around the levels of 850 to 825 band. So 825 to 850 band is a good support level for Brigade. Around those levels, one can initiate fresh longs. I think from those levels, the risk reward would be favorable. At this moment, there is no such indication of a reversal. However, beyond 960, it would provide us, a confirmation or a reversals. Thereafter, it may not fall to 850 or 825 band. Till then, it has that risk.
Okay, all right. Let's take some viewer queries that is dropping on a live feed as well. The first query coming in from Naveen is asking the view on Vishal Mega Mart on how the counter is expected to do in the near term. Of course, the stock has seen a structural uptrend from the past 1 month and of course so far this year as well. What do you believe, what's the next level that you're eyeing out for, Jay, for Vishal Mega Mart? Majority of the apparel and retail stocks have also been doing well on the back of GST news.
Yeah, I think this stock too is likely to inch higher only. I mean, we have seen DMart as well doing good. So overall trend out here, as I said, Lovisha, right at the onset that these are the sectors, I mean, consumption related, which are moving, and they are still likely to move up. I mean, we really need to see the numbers coming in for the next. Of course, most of the GST is likely to, I want to say, get implemented in the later half of this month, and then when we have this quarterly close as well. So probably this quarter's number may not reflect, but the next quarter's number definitely would show the clear picture. But I think market is factoring that, and hence the stocks are likely to perform going forward from these levels as well. In the very near term, I think 135 to 140 band is a good support level for Vishal Mega. But until unless it holds at those levels, the upside is quite likely.
Okay, all right. Let's take another viewer query. Naveen is also asking the view on Cupid and how the charts look like. Of course, we're seeing quite a bullish uptrend for Cupid as well. In the past 2 days, the stock has already surged about 11%. What can we expect, Jay? What is the next level that you're watching out for? Because it's a multi-bagger stock, and of course, the stock has been hitting record highs day after day.
Of course, I mean, this stock has really provided a nice breakout somewhere in this calendar year itself, and has given super returns. I mean, from approximately 50 rupees to now 200 rupees, that is 4 times. Lovisha, now, I mean, from the medium term to short term perspective, I would say that 170 is a good support. Until those levels are held, you can see this trend going up, and it can continue its uptrend until 225 levels.
Okay, all right. Those are the levels that we need to watch out for. Let's also take another viewer query. Nana Prakashram is asking the view on TVS Motor on how the stock is expected to do in the near term. Of course, we were discussing about Nifty Auto Index, and Jay, you mentioned that you're quite bullish from a medium to long term perspective on the auto index itself. But on an individual stock counter, TVS Motor, how does it look like?
TVS Motors is looking positive still. I mean, see, auto index, as I said, is looking positive. Two-wheeler names are looking positive. TVS has been the outperformer, so and there are no signs of shorts out here. In fact, TVS is a good performer. It can be bought, and along with that, I think Bajaj Auto can also be included from the good risk reward perspective. So, if someone really wants to get into the two-wheeler space within the auto, then I think TVS plus Bajaj combination should work well from the risk reward point of view. It could be a good diversification as well.
Okay, TVS and Bajaj Auto, those are the stocks that we need to watch out for. All right, let's take another viewer query then. We have Mukul Vaidya who's been asking the view on Bank of India for the next 3 months itself. The stock has been doing well in today's trading session, but if you look at from June peaks, the stock has a spiral downtrend with about 13% declines. Jay, what can the next moves be? Because we did see a peak in June. After that, the stock has been nearly range bound.
I don't think still there is any steam out here. See, Lovisha, that I would say that banking, as I said, 40% of the market is not performing, and as within that, the PSU segment is more under pressure. So I think that until 115 levels are not taken off, Bank of India is looking weak.
The entire banking pack is quite looking weak given the underperformance that we are seeing lately as well. Let's take another viewer query on that note then. We have Dipankar who's been asking the view on DOMS Industries because he has 78 shares at the price of 2,500 rupees and the stock is at 2580 at this point of time. He's seeing a bit of a loss at this point, and of course the stock has been an underperformer so far this year as well. However, from the past 1 month, the stock did pick up some momentum, but even those gains got fizzled out. Jay, what can we expect? What should he do at this point of time? He has about 78 shares in the company.
DOMS is consolidating within the band of 3,000 to 2,000. That's 1,000 point range. So from the lower end, you can say 50% range. From the upper end, you can say 33% range. I think it can consolidate for some more time. I'm not saying it's weak, but it's not even strong. So the strength or the momentum would only be beyond the levels of 3,000 until unless it breaks out, it might just consolidate within this band.
Okay, all right. Some consolidation could be underway for this particular counter. Let's take another viewer query then. Now we have Console who's been asking the view on Prestige Estates on how the counter is expected to do. Jay, what can we expect? Of course, we did see that there was a good build-up from April lows. However, from July onwards, the stock has been, on a downward trend. And right now, it's been oscillating between 1,600 to around 1,500 rupees. What can we expect the next level to be?
Yeah, entire sector is right now into the consolidation or correction phase. This stock particularly bounced back quite well. It outperformed as well. But right now, I think Lovisha, unless 1600 levels are not taken off, the short-term trend is weak.
Okay, short-term trend could be weak for prestige estates too. So do watch out for the counter. Let's take another viewer query. We have Mohammed Rasool has been asking the view on Mazagon Dog. He's asking what does the near term look like for the counter. Of course, the stock has seen a good performance when it came till May itself, but after that the stock has been spiraling downwards. 20% downtake coming in from May itself. What is the next level that we can watch out for, Jay? Is there more underperformance left in the counter?
See, there has been some positive divergence in the momentum, so there can be some bounce back. I mean, entire defense has seen good short build-up, Lovisha. Defense you see, or maybe capital market. I mean, these two sectors perform quite well, well ahead of the auto as well, right? So if you see the first of the half of this calendar year was well dominated by defense and capital market stocks. These two sectors really did well. And now I think they have seen good correction on account of short build-up. So there can be some bounce back due to short covering. But the overall trend from the medium to long-term perspective, or from the medium-term perspective rather, I would say, seems to have reversed from up to down. It can either consolidate or after a bounce back it can again fall. But definitely looks unlikely to take off its recent highs. The entire defense back.
Okay, all right. Defense pack is something that we'll be watching out for as well. Let's take another viewer query. We have NextGen who's been asking the view on Parag Milk Foods on whether it is looking good on the charts from a near-term perspective. Of course, from the past 1 month, the stock has been an outperformer. The stock has given out about 20% returns. What can we expect the near-term holds like for Parag Milk and, of course, the other dairy stocks as well? Jay, because given the GST cut, majority of the dairy and agriculture stocks have been doing well on the back of that.
Of course, this segment overall is looking positive, and I think as far as Parag is concerned, 240 is a good support till those levels are held. There's a good potential on the upside. See, in the near term, you can see the levels of 300, but beyond 300, Lovisha, I think that it can inch towards the lifetime highs also.
Okay, all right. Lifetime highs also. Let's take another viewer query. Then we have uh, we have Satya who's been asking the view on Nitco outlook for the short term as well. Nitco, any particular what do you suggest from a near term perspective, Jay?
I think it's thinly traded stock. I mean, recently it has gained some volume. Otherwise, the stock had many circuit filters, and I generally would not recommend this stock kind of a stock to be held in the portfolio. It has had a fair run up. So till we don't see a meaningful volume, at least for 2 or 3 quarters getting developed, build up, I think it's better to stay away from these kind of stocks.
Okay, all right. Let's take one stock in focus. That is your Realtel Corporation. The stock has been soaring in the trade, 5% gains coming in for the counter. We did see that the company secured multiple orders, which was worth about nearly 400 crore rupees from Bihar Education as well. And that's why we can see some good developments and, of course, a good buzz on the counter as well. However, from June peaks, the stock is down about 22%. What can we expect the near term to hold, Jay? Can we expect the downtrend to continue after this news has been priced in?
Yeah, there was one phase of the market wherein we saw the entire market moving up. Thereafter came, the few stocks which really outperformed the overall market, and those were PSU names, then which included, many defense names, many railway names, some of the capital market names, and these sectors really did well. The last September, when the Nifty topped out, so it's almost getting a year, we have close to a year of downtrend in the market, wherein Nifty has not taken off its lifetime high. So since then, you have not seen these railway stocks really participating, right? And I think whatever bounce you're saying is just a short-term bounce. They are into a larger consolidation phase. So I think that only the next bull run is when you will see these stocks coming back until unless they are likely to correct or consolidate.
Okay, all right. All right, Ajay, just one last question before we let you go. What are your top picks at this hour? Any particular stock that you're watching out for?
Well, in this momentum, as a disclaimer, we have a buy recommendation on Havels. I think Havels, if it managed to surpass 1585 levels, right? So above 1585 is a conditional buy. One can go long on Hamels for targeting around 1620 to 1640. And second buy recommendation would be JSW Steel. We have seen a good long build-up. In fact, metal is also Lovisha, one sector which has performed really well in the near term. So I think that till 1070 levels are held on JSW Steel. With that as a stop loss, we can go long, targeting around 1150, 1200 levels.
Okay, all right. Right, metal stocks, likely to outperform in the near term. That's what the key takeaway we are taking. And of course, IT stocks still remain on a cautious note. But with that, we have to let you go, Jay. Thank you so much for your time and connecting with us.
Thank you. Always a pleasure to be on your show. Thank you.
Right, let's take a quick check of the markets, how we hold up. We're still positively in the green. Sensex up about nearly 300 points and Nifty also holding above that 24,800 mark as well. If you look at the majority of the sectors, if you look at the Nifty Auto Index, it has flipped back into the positive territory with about flat to positive bias. On the other hand, if you look at the metals, like we were talking about, seeing a little bit of a profit booking with about 0.2% cut. On the other hand, Nifty IT Index, definitely one of the top sectoral performers on the back of the Infosys buyback news, 2% gains coming in for the IT Index, and then the broader end of the markets, mid-cap and small caps, both of them exhibiting, outperformance. However, a bit of a mixed trade coming in. Small caps with about flat to positive bias. On the other hand, mid-caps have slipped into the negative territory on the other hand. So yes, all in all, a very flattish trade coming in from the broader end of the markets. But yes, if financial freedom, that is something your goal, then Super Pro can be a superpower. You can get all the live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp all in one. And right now, we have a special financial freedom offer. You can get the annual plan for just $24.99, which is down from $74.99. Download the Money Control app and subscribe today itself. All right, with that, let's quickly move on to our next guest of the show to understand how you should place yourself in this market like this. We have Daljit Singh Kohli, Head of Equity, Roha Asset Managers, joining us. Daljit, good morning. Now that the GST news is out of the way, what is the next that the markets is watching out for?
Good morning. Thanks for having me on your show. See, market has a lot of news flow to react. No, every day there is, and we have a continuous flow of news from Twitter. No, where one gentleman keeps writing anything and everything on a daily basis. So market will have enough to react to. But I think the things to watch out would be now how does this GST uh, benefits ultimately result into the consumption growth. No, there are a lot of hopes that this should lead to a big like J curve kind of thing in the consumption pattern. If that happens, and how we will see first signs of that after probably only for 8 or 10 days of this month, when after this Shraddh Paksh period, when the auspicious period starts, when the consumption buying will start. So let's see how these numbers come in. I think market will keenly watch for this. And this will also have, that last 1 week of numbers will also have an impact on the quarterly earnings, because once the announcement was made on 15th of August, from there, I think a lot of purchases would have been deferred. So, which would mean that almost 1.5 month of buying would have been deferred. Now, whether that is deferred and it comes back in the festive period, or it is cancelled, that is what we have to watch out for. So we'll have to very keenly look for the last week of this month.
Okay, all right. Daljit, a very interesting conversation I was having earlier, where it was mentioned that 30% of the markets is performing. However, 70%, a larger chunk of the market, is still behind because of the underperformance that we are seeing in IT and the financial SPAC. What do you believe? Can you expect the Fed policy outcome next week to trigger some moves in both of these names, given that FIIs have been net sellers for both financials and of course the IT stocks in the past month as well?
Both these sectors are very well covered. Almost there is nothing to really look for latent things in these things. Most of this is highly predictable. All these companies are highly vocal about what is happening in their sector. So the chances of a surprise are very low. But what our understanding is that from IT sector especially, that probably it is now nearing the bottom. Maybe slightly early to say, but in the last 2 3 years, if you see, the earnings have caught up, but the valuations have come off very sharply, especially the tier one kind of companies. There is still good performance from the mid cap IT, but the larger IT, they have not performed at all in last 2 3 years. So that has made this valuation attractive. Now there is a big overhang of what happens in the, because IT is ultimately dependent on US, and what happens from that side on the tariff part. There are this last 2 3 days back there was some rumor about putting some tariffs on the services part also, etc., etc. So I think that kind of that will keep volatility. But in terms of pure fundamentals, we are now considering this sector. Till now, we don't have as a disclosure, we don't have any IT stock in our portfolio, neither small nor large. But now we have started working on it, that probably the time is coming very close. Maybe a few months from now, things will become, it will be probably bottoming out.
Okay, okay, all right. Daljit, I want to understand from an auto index perspective that yesterday we did see, and of course, that auto stocks have been rallying on the back of the GST news. But auto ancillaries, be it the likes of Bharat Forge or even Samvardhana Motherson, all of these counters were rallying on the back of the GST news being priced in as well. Samvardhana Motherson also gave out some ambitious targets in their investor day, saying that they will not be concentrating on one particular geographic location in terms of their revenue, and they'll be focusing less than 10% of their revenue on one particular geographic location. But how do you think every player has been positioning themselves to offset this impact of US tariffs? Do you believe that this some bottoming out of the tariff news and the tariff heat that the auto ancillaries players have been facing could be on the horizon?
Yes, I think we are very positive on this sub-segment of auto, because auto OEMs are by nature very large companies, large cap, so they don't fall into our purview of investment, because we are more mid and small cap oriented fund. So we have to by default look at auto ancillaries, and we have been very positive on couple of these names. In there are, as a disclosure, couple of them are there in our portfolio also. So we believe that, see, within auto ancillary, again, you have to build, segregate it into two segments. One which is catering to domestic demand, and one which is catering to the international demand. International demand, yes, there will be some impact here, tariff here and there, and but most of these auto ancillaries, they have this business model that they are near to the customer. So normally that problem of tariff is also not too much to them, because they're already present in that geography near that location of the consumer. On the domestic front, there is a lot of changes happening on EV penetration, on infotainment, on mechanization, ADAS, etc., etc. So all these things are leading to content per vehicle going up. And most of these, the good part is that a lot of these auto ancillaries, they're gearing up very well. So from one particular one product company, they're becoming multi-product company, one technology to multi-technology company. So there is a lot of things happening there, and we are well positioned to take the advantage of that. I think a lot of good stocks have moved very well also in the past few months, but there could be some potential still there.
Okay, okay. Daljit, what about for the auto sales growth? Are you envisaging a double-digit sales growth now that majority of the automakers have announced certain price cuts as well? And where do you see the PV sales to go from here on?
Yes, I think this GST movement, see, in any case, we were bullish on auto 3 4 months back also because of the rate cut cycle. Normally, we have seen in the history that whenever the rate cut cycle starts, auto is one area which picks up faster, and it sees that kind of growth, because most people uh, tend to buy these vehicles when things become slightly or the interest rate becomes lower. Now with this GST coming in and that the kind of cuts they are announcing, 2 lakh rupees to 5 lakh rupees and all of that per vehicle, that's a big saving for anybody who's looking for buying. So I think the numbers should substantially move up. As I said, because we are not investing directly into OEMs, so I won't be able to share the numbers of what kind of passenger vehicle numbers we are looking at. But definitely, I would say that we are looking at significant jump in the numbers from all these auto OEMs. We are playing this theme through one of our auto distributor, one of the company listed which is into premium car sellings, and for quite some time we have been invested in that. First, almost last 1 year it didn't work out, but now for last 5-7 months it is doing very well. The stock has given us good returns for that.
Okay. Now that you're big on consumption theme as well, given that we have rate cuts, income tax cuts, and of course the GST cuts, which has provided a booster, any other new theme that you are tracking which has the potential to turn into wealth creators in the next 5 years, so to say?
So next 5 years, I think everything in this country will work well. But yes, there are certain themes which will continue. As I said, now is the time to look at probably IT, which has been an underperformer. Pharma or agrochemical is a continuous theme. So within pharma, you have to again look at some sub segments like CDMO, etc., where we are very well positioned. Agrochemical, we are doing well. Specialty chemical, again, 3-4 years have been underperformance, but within that period, many of these companies have invested a lot of money on their backward integration, new product launches. So those will come in next 1.5 years. The numbers will jump up very fast. So I think those are the again areas where one can do besides the consumption.
Okay, all right. Let's also talk about gold versus Nifty, because if you look at gold, it's once again at record high levels today. And, we did a money control story where we saw if an investor invested about 10,000 rupees 15 years back in gold versus Nifty, gold has outperformed the benchmark. So how would you suggest investors to allocate their portfolio vis-a-vis gold and, of course, the equities?
I think 5 years back, we used to say point blank, don't invest in gold 5 or 7, 10 years back, because this is an asset which does not give you any dividend yield, in fact, you have to pay for keeping it safe, but then if you see the performance in the last 4-5 years, things have changed. And basic fundamentals have changed because most of the central banks have started buying gold for as a tactical asset versus the currency, basically, the token currency. So that shift itself has made a very big change in the fundamentals of the asset class. And therefore, now it deserves position in your portfolio. But of course, you can't have a very large position because ultimately, no gold is just destroyed. No, whatever is produced, it just keeps changing shape. So finally, how long will these central banks continue to buy? How much asset class built up will happen? That will drive the stock price of the commodity. I think 5 to 10% of your portfolio is a good enough number for anybody to have, just as a hedge against all these inflation problems or the issues regarding these uncertainties in the geopolitics, etc., etc. So it can be a store value of money, but it cannot be more than 5 to 10%. And then again, it has a very peculiar nature. Gold has a very peculiar nature. It performs in, you say, jumps, in step ups, and it will always be in after a lag of 3-4 years, it won't perform. But then suddenly in 1 year, it will just jump up and then it will take care. So last 2 to 3 years has been different, but normally that is the way if you see the history. So you have to be again very clear that now if somebody is thinking of buying right at this point of time, you are buying after a very strong up rally of phenomenal rally of last 2-3 years. So then again, obviously the potential returns will become much lesser. So you have to be cautious of that also. But yes, 5 to 10% of your portfolio can be.
Okay, all right. 5 to 10% of portfolio should be concentrated towards gold. That's the key takeaway we are leaving you with. But with that, we have, we have to let you go, Daljit. Thank you so much for your time and connecting with us.
Thank you.
All right, let's take a quick check of the markets, how we are faring at this point of time. Sensex still nearly up about 300 points and Nifty also doing well above that 24,850 mark as well. If you look at the broader end of the markets, however, mid-cap and small caps, both of them flattish in the trade. Nifty Auto Index seeing a little bit of a profit booking, 0.1% decline coming in there. Nifty IT Index, that is the stock of that is the index of the today, 2% gains coming in on the back of the Infosys news. Nifty Realty Index once again with seeing a little bit of a profit booking, flat to negative gains, flat to negative decline for the realty index as well. On the other hand, consumer durables also seeing a bit of a profit booking, nearly 0.4% decline coming in there as well. Nifty Pharma Index, however, with about 0.2% gains after yesterday's underperformance. Nifty FMCG also seeing a bit of a buying interest, flat to positive gain. That is where we are at for Nifty FMCG as well. On the other hand, if you look at the Bank Nifty Index is still holding well with about 0.1% gains. And on the other hand, if you look at the private banks and the PSU banks, both of them have been holding well at this point of time. So all in all, we are in the positive setup for the markets, but given that it's the expiry day, so some price swings could be on the anvil as well. We'll talk about it later in the second half of the segment as well. But yes, if financial freedom is your goal, then Super Pro can be your superpower. You can get all the live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp all in one now. And we have a special financial freedom offer. You can get the annual plan for just $24.99 down from $74.99. Download the Money Control app and subscribe today itself. All right, with that, we have come to end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.